You can buy a stock in 3 seconds, but do you actually know what you just bought? Many beginners don't lose money because they picked the wrong app. They lose money because they never understood what they owned.
That sounds uncomfortably possible. So when I press buy, what am I really buying?
That's the question, and we'll answer it with one simple example. Ichika's Cat Cafe.
Good. A business, not just a blinking number.
I've always wanted to open a cat cafe. Good coffee, quiet space, cats everywhere. Then I made the budget. Rent deposit, renovation, coffee machines, furniture, licenses, cat supplies. Total cost, $100,000. But I only have $50,000. The idea is real. The money is not enough. So what do I do?
You have two basic choices. 1, borrow the money. 2, sell part of the cafe to other people.
Sell part of the cafe?
Yes, and that second choice is where stocks begin. Imagine the whole cat cafe is one complete business. Now divide it into 100 equal pieces. Each piece represents 1% of the cafe. If someone buys one piece, they own 1% of the cafe. That piece is called a share.
So I get the money I need, but in exchange, I give up part of the cafe.
Exactly. You are not receiving a donation. You are selling ownership.
Money goes in, ownership goes out. Nobody did this out of kindness.
That is the simplest definition of a stock. A stock is a small piece of ownership in a business.
I'm buying it because I think this cafe can become more valuable. The location is good, the business idea is clear. If customers like it, maybe one cafe becomes 2 cafes. So I'm willing to put in money today for a chance at future growth.
So he is not just buying what the cafe is today. He is buying what he thinks it could become.
Yes, that is why people buy stocks. They want to own part of a business's future. If the cafe becomes more valuable, each piece of ownership may become more valuable too. If investor A bought one share for $1,000 and later sells it for $1,500, he makes money. But if the cafe performs badly, the opposite can happen. The share may lose value. If investor A sells at a lower price, he loses money.
So buying stock means sharing both the upside and the downside of the business.
Exactly.
Ownership sounds romantic until the business disappoints you.
There is one more possibility. If the cafe makes a profit, Ichika can choose to share part of that profit with the shareholders. That payment is called a dividend.
So investors can make money in 2 main ways. The share becomes more valuable, or the business shares profits with them.
Yes, but neither is guaranteed. The cat cafe is just a small example. Real companies are much bigger and more complicated, but the idea is the same. When you buy a stock, you are buying a small ownership stake in a real company.
So a stock is not just floating on a screen. There is a business behind it.
Exactly.
Most people stare at the blinking number and forget the business underneath.
So why do people invest in stocks? Because businesses can grow. If a company becomes more valuable over time, its shareholders may benefit.
So the attraction is not just the price moving up. It is owning a piece of a business that may become more valuable.
Exactly. But businesses can also disappoint. They can lose customers, lose money, or even fail. That is why stocks have both future potential and real risk.
Hope is expensive when it forgets risk.
So what is a stock? A stock is not just a number on a screen. It is not just a chart moving up and down. A stock is a small ownership stake in a real business. More simply, when you buy a stock, you are buying into a company. And that means you are investing in that company's future.
So before I buy a stock, I should not only ask, will the price go up? I should ask, do I actually believe in this company's future?
Exactly.
Anyone can buy the prize. Understanding the business is the difficult part.